Welcome back to another edition of 3D Traders, where we give you our insight on the market with our three different perspectives. We have Everson, my co-host for today. I'm Patrick. We have Everson from Hawaii. He's our master of the momentum trades. And the other guy, he doesn't even need to be introduced. So let's move on to the first thing we have to talk about, which is, remember guys, this show is for entertainment purposes only. You cannot take everything we say to the letter. You have to interpret it. And anytime you have doubts, just consult one of the licensed professionals. The show is for entertainment purposes. Don't sue us, bro. No, we have to introduce Max. He's our co-host. He's a chart master, and the reason why I said that little joke is because he saw something this week that made him laugh, and I promised him that I would do it. Want to tell us real quick?
I was on a webinar, and this man is famous. Everybody knows him. He's a guru of his industry, and so he's being introduced by someone. I don't even know who the guy was, but he was like, hey, you know what? This guy doesn't even need an introduction. Everybody knows him. Here he is. Didn't even say his name. The guy shows up on the webinar and he just goes, okay. And he just starts his presentation. I thought it was so funny.
Right, guys. So we've had an amazing week. I think everyone did well, probably our listeners too. But there's still some roadblocks and challenges that everyone faces. So why don't we all start by talking about what we saw this week and how we did. Everson, why don't you give us, I think you had a pretty big week, so.
I did a lot.
Don't pat yourself on the back too much, but come on, tell us about it.
Because I didn't do any trades really. I mean, I had a lot of positions. I take that back. I did. I put in some trades. When you get a good call sign, or when you get a good bull market rally, I think it was 4 o'clock, 3 o'clock here. No, it was at 3 o'clock here. And, once the news started coming out and everything, we all get texting, at that point. And you could literally buy anything. You could literally buy anything and probably had made money on a bull market day. But with that being said, AMD, I did triple D, I did TGI, and I did Boeing is the stocks that I picked up on the day. But who's to say that it's just it's just a one-time thing, and we get turbulence next week. So I don't know what to expect, but as far as the sentiment moving forward, I really feel good about the market. I still practice having a safety net, so I'm still losing money with my puts and all of that. But like I said, that's just an insurance policy for me. So no matter what happens, you just want to have something in the back pocket. And so that's kind of like how I set myself up for the week, is to have a little bit of insurance. And I bought in strong with those companies I've mentioned.
Yeah, that's really good. And Everson, you pointed out something that I want everyone to really pay attention to. I mean, let's be honest, the market last week made a lot of people look like geniuses, right? But don't get too cocky.
No,
there's a saying that rising tides raise all ships. You could literally have bought almost anything and made money. So don't think that you're like the genius, the pro of investing. Keep plugging along and like being safe and following your strategy. But often it goes up, but it's going to pull back too. So don't get too cocky. What about you, Max?
Oh, I thought you were singling me out, because my head was getting so big. But so last week was really interesting. It's a very good week, or it was a very good week for the Delta traders. The Theta traders might have been a little bit behind in terms of profit percentages. But, that's not what the Theta traders are there for. So I was just collecting my rent on silver. And what's interesting is, I get recommendations from Everson and Patrick all the time. And he gave me the recommendation of JD looking for a pop. And so I was actually analyzing the chart, and our visions align properly. So I made the trade. And what was interesting is, so it sort of retreated on me. So what I did is I lowered my sold position, recoup a little bit of money that way. And as it retreated some more, what I did is I flipped it. So I turned it in from a delta position into a theta position. And so that's where I made that money. So I didn't capitalize on my 80% return on the trade because I was looking for the 100. So I got greedy, like we talk about all the time. The pigs get slaughtered. But I just did the flip and collected a little bit of theta and had fun with it. So thank you, Everson, for that. That was fun.
Nice.
So yeah, that was basically my week. Silver, some JD, and then just exploring some of the sectors.
Yeah.
Yeah, and on my hand, it mixed bag a little bit because since in the past few weeks, remember on the show I talked a lot about always hedging my position and stuff like that. So this week I had stocks and options that went up, but I also had stocks and options that went down, kind of capped it. So for example, as I mentioned before, I have investments in XLE, but I have a covered call that's really buried now. So even though the stock went up significantly during the week, well, the covered call on it loses value, so it kind of balances it out. So I didn't make as much as I possibly could have. So I'm a little bit disappointed about that, but see, that's the thing we talked about last week. I mentioned that right now my goal is to stick to my strategies, and I'm not as worried about the results monetarily. Of course, profit is good, but as long as I stick to my principles and good risk versus reward, I achieve what I'm looking for. So that was my week. I mean, I didn't do anything really special. Every stock that I had just went up naturally, and moving on from there. So I just want us to talk about the market rally in general. Everyone here did pretty well, but since the market went up so much, unemployment was a very nice surprise. Well, where's the opportunities now? Because a lot of these stocks are hitting new 52 weeks high, and in a lot of cases, even all-time highs. So Max, what do you think about this? Like, what can we do right now, and like, where's the market in terms of the rally?
So to be honest, I always shun being in cash, especially right now, just because of all the inflation we're receiving. But this one time, I'm gonna say, stay into your saving account positions where you're collecting theta, whatever it is with that cash, just because I'm not exactly sure what's happening in the market. If you're looking at the SPY, it's sort of approaching a resistance, but it's still pretty far away. But if you're looking at the sectors, they're very close to the resistance. In fact, if you're looking at the utility sector, it's right by the resistance. So I would wait to see on Monday if we break through that resistance, and that would give me a clear sign to get in buy position and be very bullish. Now, if the market retreats, it shows that the resistance on most of the sectors is very strong. I get bearish. So as of right now, this doesn't usually happen, but I'm on the sidelines.
See, I don't see it the same way. I kind of expect it to retreat a little bit just because of there was such a big increase in the previous week that I find it naturally there is going to be some profit taking. I don't see anything more than that. I expect the rest of the week to be mostly in the green. I think you kind of agree with me, Everson?
I think so. I think we could even see a sideways trade. So we were talking about that and earlier in the pre-show. Maybe we should do like a special thing where we allow people to see our pre-show.
That's where the money is. I don't know if we can do that.
Wait, how much are people paying
like
for this show right here? Because the pre-show would be twice that.
Right.
Yeah, it's $25 goes each way. Total of $100. $25 goes to our production. $25 to each of us. If you want to be in the pre-show, it's $100. Let us know.
Yeah,
we just determined that now. No, I'm just kidding, but kind of not. But as far as your question that you asked, so it was kind of interesting that you were mentioning that, and as you were talking, it brought up perspectives on me analyzing my own production and my own productivity as I move to the market. I look at one of my portfolios. So what I like to do is I like to build portfolios of about maybe $10,000, and I'm getting ready to cut the head off, if you would, of one of the portfolios because it's getting too big. But I just thought about maybe even changing my my philosophy up into $20,000 portfolios and just build it from there, so I can, eventually start the J trade on those. But besides the point, when I'm looking at the regain in the charts, I have one portfolio that's a flat growth, another portfolio that's a V-shaped recovery, another that's a U-shaped recovery. So I need to go back and take a look at what I have in those portfolios and really begin to analyze them to see, why do I have such different trends on all of them, and where my mind was at the time that I created these trending stocks, and why they react the way they do. With that being said, everything is on the upside, just to throw that in there, but just to be able to understand, how everything goes. So as far as the markets moving forward for next week, I really do think that next week we're going to see kind of the same as what you said, Patrick, that growth, maybe even a sideways, though. I'm thinking I don't see it necessarily to be a down day. The only way that I see it maybe being a down week would be if the Fed scale back and the institutions scale back on putting funds into the market, just to see how the regular traders like you and I would do it, or your viewers out there, just to see how they would do it. And maybe if you need that encouragement, they bring in that stimulus from the institutional spending and all of that to be able to just flood the market. Or like you said, people take profit and it goes down for a little bit, but I really don't see it being a down week.
I really like that, and I want to have Max's opinion, but my theory, I developed this theory this past week where, remember, for the past few months, actually since the pandemic started, a lot of hedge funds, a lot of very influential people on CNBC and everything, on some of the bigger investment websites, they always said that they were very skeptical of the recovery and they were staying on the sidelines and everything. So what I'm thinking is, okay, the SPY went from 220 to 320. Yes, we know a lot of it is from the government injecting trillions of dollars in the market, but how can they justify to their clients staying on their sidelines? Like, one of the big influential guy mentioned that they downscaled from 55% of their portfolio to 25% of their portfolio in stocks. Well, this is one of the biggest market rally that we've seen. So how could they justify to their clients being on the sidelines right now, where everyone is making money hand over fist?
I don't think they necessarily do that, though. I don't think they necessarily stay on the sidelines. Sorry to interrupt. I think they get into bonds, a lot of them.
Yeah, but that's exactly what I'm aiming at, is now it's going to be very hard for them to sell that to their clients. So I feel like they're going to have to go back into the market. So even though it's already gone up tremendously back to 320, I think that short term, there's not a lot of momentum to go back down. Like, these guys that are on sidelines, they kind of have to get into the market. What do you think, Max?
So yeah, I agree. I really feel like the market's going to pop to, if we're talking about the SPY, from 420 to 540, depending on how conservative you are. But I'm just looking at more smaller trends to see when's the good time to come into the market. Because if it starts retracing on the SPY, then it would hit that support and see if it holds that support. To me, that would be a great buying opportunity. Now, if it goes up on Monday, then I would look at some of the sectors that I mentioned, like utilities and discretionary sector, and then get into those positions, because I feel like they're going to pop as soon as they cross that resistance. But now there is a lot of money on the sidelines. And so like Everson was talking about, getting into bonds. To me, when money's in bonds and other vehicles other than the stock market, but it used to belong to the stock market, I consider that sideline money. And what's interesting is when we were at the peak of 2008, I just want to say this real quick. 2008, we were at 65% of households invested in the stock market. Now, the peak that we had, I believe in January or so, before the crash, we were at 55%. And actually, the administration was trying to bring it back up to 63%. But with this crash, we are down to 53%. So there's still even more money on the sidelines ready to come in.
Yeah, I mean, I don't doubt, like you said, short term there might be a little retracement. I mean, it would make sense. People taking profits out, it's gone up so quickly, but we're talking about like 3 months, 6 months, unless there's a huge event like a big reoccurrence of the virus. I personally think that even though I've been bearish for months, right, I'm still skeptical, but there's just so much momentum forward that, you have to analyze it. And what else can I say? So
Hey, I
what
have
do
a
you,
question real quick. I'm
sure.
sorry, Patrick, to interject, but now, Everson, especially since you're probably our biggest delta trader on the show, are you excited to see the price of your options going down just because the volatility is going down so you can enter a position cheaper than you used to 3, 4, 5 weeks ago?
Well, I mean, some stocks aren't too cheap. I forgot what stock it was, but last week, trying to think of. Okay, so there's one stock that I was trying to get into, and it even on the 1 week, it was trading like at $400. To me, that's pretty expensive for it to on a close proximity, just a week away, that it trade at $400. So I never got in. So I think that some of these stocks have I'm wondering if some of it is priced in already. If parts of the rally has already been priced in, because
Yeah.
if it's already been priced in, then we're looking at a different dynamic moving forward, right? And I kind of get this price in effect by looking at the way they adjust the option trade, whereas we all know that when the momentum is starting to go downwards or upwards, doesn't matter what the direction is, it's usually cheaper when you start to flip it elsewhere. But when it's common knowledge of that particular stock to be moving 20, 30% because it's just that volatility alone, they would price action that out to be just too out of range for me, and I don't want to touch it. So a lot of the stocks, I know you're going to hate me, Max. AMD has always been a pretty good number, and it's actually looking like to myself, it's actually looking like it's good numbers. I mean, it's close to the money, and so I look for opportunity where stocks have been overbeat, and it has, like you were saying earlier, the chance to grow. Perfect opportunity to jump into those stocks. You know me and dividend plays, I like to play it safe sometimes. So it's.
Sorry, Patrick. I just wanted to get his opinion because I'm looking at the VIX and it's dropped significantly. So I didn't know if you guys had experienced cheaper entry points with your options. Sorry, Patrick.
It's all over the place.
No, that's a very good point. Just for people that are newer, when the VIX is low, which means like the volatility, it's usually better to buy options because Max talked about it when he gave the example. Was it the AP, Max? Was it what's down must come up and what's up must come down at some point?
Yeah, Vega traders.
That it's slow now, so there's only basically one direction that it can go eventually is back up, right? So that's basically the principle. So if you want to buy options, that's potentially one of the better times. But just to make sure that everyone knows, I mentioned that I'm pretty bullish on the stock market again, but I want everyone to understand that with reservations, in the sense of we've had 3 to 5 years of very good growth in 6 weeks. So you know what I mean? Like, you have to be careful still. It's not always going to go back up. I personally think that we're kind of like in 1999, where the market is very inflated. But that doesn't mean that it's going down tomorrow. There's still momentum upward. The only thing that I can warn you about is not to be caught holding the bag when eventually it bursts. But when that is, I have no idea. No one here knows.
So wait a minute. Everson, did you hear this? I think Patrick just said he's still a rainbow bear, but he's masquerading as a bull for now.
Yeah, pretty much. So that leads us to talk about where are the opportunities right now? Because a lot of these stocks crossed their 52 weeks high, and a lot of them are actually past their all-time highs. So a lot of the stocks that I would have been interested in, not at those prices. Like the recovery was so quick that in a lot of stocks, it feels like we kind of missed the boat. So where do you guys actually see opportunities? Max, you like the utilities. I kind of disagree, but what's your take on it?
Well, so I'm saying that the utilities are right at their resistance. If we have an update on Monday, it's going to be a great entry point to get in just because the resistance is going to be so much higher. The strongest sector, which I'm sure we all agree on, is the tech sector. If you look at the tech sector, it's almost back at its all-time high, which is very strong. And so if it crosses its all-time high, now it has no ceiling and it can create its next high from that point. It could be very bullish. I'm just talking about look at Monday and Tuesday utilities. If you're looking for a bigger picture, wait for that tech sector to cross its all-time high, and that's going to be a good entry point.
What about you, Everson? Like, what do you think where should people look right now? Because a lot of stuff is so overpriced.
Yeah, so I don't know. I'd say look at the numbers a little bit as far as the reopening of the government, and I like to look at the news on even when what's going on with the riots and all of that. Not so much the peaceful riots, but when it starts to get extreme. I've seen Starbucks being, a lot of Starbucks stores being damaged. Stupid, but they damaged the Apple stores. They took the Apple products. Just for you viewers out there, anybody that had actually broken into the stores, they will track those devices so they can shut it down or whatever. So it's not a good thing. Airlines. I think airlines will do well moving forward. I think it got room to grow. I think more people will end up traveling, so it looks good for them. So airlines and rental cars.
Yeah. Actually, that's one of the things that I had a theory about, like Patrick and his theories, right? So I wanted to have you guys' opinion. A lot of stocks already crossed their 52 weeks high. So I'm looking for, well, what's the next best thing? And if you remember one of the first episodes that we actually had, I mentioned that I'm looking for stocks that add, when there was this small uptick before the news got really bad, there was a small uptick, and some of the stocks that had been hit the most are the ones that went up very quickly, like the airlines, as Everson mentioned. So I'm thinking now, well, what is the next best thing? Is it the stocks that haven't fully regained what they lost in the market? And Max and I had a little bit of a disagreement on this. For example, what do I mean by that? Well, if you look like at a stock like Hasbro, for example, which makes kids' toys and stuff like that, Nerf guns, I believe, Magic the Gathering, stuff like that, kid-oriented products. Well, at their shut up. At their peak, the stock was at 126. At the low, it was low 40s, 41, 43, something like that. And now it's at $80. So if we look at it this way, it only regained 50% of what it lost. Well, is that a better opportunity than a stock that went from 50 to 100, where before the crash, it was at 90? So we have a little bit of we can make the case both ways. I view it as maybe the ones that haven't fully recovered yet are a better play. Max seems to think that not necessarily. So how do you view this?
So, I mean, I get where you're coming from to see that the PE ratios for some of the best companies in the sectors might be getting too expensive. But there's a reason why Hasbro hasn't recovered as quickly as the other companies. Why? Because it's not as good. It doesn't have the same market share. It doesn't have the same growth potential. So be careful. Just because it looks cheaper, there's a reason it's cheaper and it's not recovering as quickly.
No, absolutely, for sure. My theory about that is we have proof that people were willing to invest in it at 120. So now that it's at 80, there's a very good possibility that it can go back up. Like it's done it before, as opposed to some of these companies that are just reaching their all-time high. You're right. I mean, there's no ceiling now. It can go up more, but we don't really have knowledge about that. Like you always mention that you're reacting. Well, you can't really react. You don't even know what the resistance is going to be anymore.
Uh-oh, Everson, you got to be the tiebreaker.
Well, when I look at the PE ratio, right, it's at a 23.49% PE ratio. It's got a dividend of 3.53%. Analyst perspective on Robinhood, at least, they have 19 analysts that rates it as a 68%. No one's selling this stock. I don't know why you would. And 32% as a hold. The Morningstar rating gives it a 4-star. It's a narrow economic, I guess, with its growth. A fair value would probably be price point at $89 per share. Some medium uncertainty, and the stewardship of the company is about a standard stewardship. However, they are losing earnings, but it's not to a point where they're not making earnings. So they still are able to make earnings. It's just how much of a value would Hasbro be? I mean, like you said, they're into kids products and all of that stuff, but I think it's more than just kids. I think it's collectibles also, but more importantly, I'm looking at their digital licensing. I believe that's like the next transformation of their operation, is the digital side of things. So, with 5,000 or about maybe 6,000 employees, this seems like it's an okay hold for me. But as far as opportunity moving forward, I mean, maybe, but
Let me just extrapolate that. Let's just extrapolate. Forget Hasbro. I'm talking about in general companies like. No. What I mean is, we talked about RCL before, CCL. Those companies that were really hit hard. I mean, Carnival is at 21, 22. Their peak was in the 50s. You know what I mean? So there's more risk to it. Maybe it's going to take a year before they're back to full strength. But my point was the questioning that I was bringing is, does it have more room to expand than some of the other companies?
Right.
Because it's at 40% of where its top was a few months ago. It's in that regard. So I forget one specific company. Like extrapolate that to that type of stock.
Okay. All right. Let me make my point here, and you guys will know how serious I am because of the stock I'm going to use. I might throw up a little bit just mentioning it, but this is how serious I am. If you're going to go into stocks that haven't recovered as quickly, like you're talking about RCL and all those, there's a reason why they're not coming back. Why? Because they're not going to be back in full business as quickly as other companies. If you're looking for a quick return, and you're talking about holding a stock for a year just to get back to even, look at AMD. AMD will rise quicker than a cruise stock. And it hurts me to say that. Yeah, it hurts me to say that.
AMD, like what's going on with you guys?
I'm bearish on AMD, and Max is bullish. What the heck is going on?
And look at this. I'm drinking tea. You can't see it, but I'm drinking tea. What's going on here?
No, I just had to show how serious I am. So, if you want to go back to Hasbro, I know you were talking about, hey, let's not talk about Hasbro specifically. Let's talk about general ideas. But I just want to pinpoint, there's a reason why Hasbro is not recovering as quickly. And if you were talking about the highs above 120, but if you're looking at the chart, Hasbro is symbol HAS. I'm looking on a weekly chart just to see a bigger picture. Your highs was actually a double top. Let's see, this was July and October was a double top. So it actually started dropping before COVID-19 happened. And it's been doing lower highs and lower lows ever since. Now it has recovered a little bit, but it's the reason why it's not recovering as quickly as the other stocks is because it was already on the decline. And like Everson was talking about, the fundamentals are flawed. So I'm not just talking about Hasbro specifically. I'm talking about all the stocks that haven't recovered as quickly as the best stocks right now. There's a reason, because they're not getting back to business as quickly as those A-plus stocks. Let's just call them that. Or there's something flawed in the fundamentals that's not allowing investors to be as confident with them.
You know, when I look at
what's your
this
take on
stock,
it?
though, if I could talk about this real quick. So when I look at Hasbro and I do a comparison with Hasbro to Mattel, right? Mattel sucks. I mean, I'm sorry, my personal belief, Mattel sucks. They don't even have a PE ratio. They don't have earnings. They don't have a dividend. They're trading at $10.50 per share. Now, high level of uncertainty, but yet Morningstar gives it a 5-star rating. So I don't like either of them, but if I had to choose between a stock like Disney, Mattel, Hasbro, and maybe Activision, I may actually just choose either. I might choose Hasbro or Activision, to be honest. I mean, I know that Activision has a very low yield, but PE ratio is at 34.40. It's an 82% buy rating from 32 analysts, and 3% sell rating, 15% hold. I know it doesn't give the greatest strength of earnings, but it's beat its expectation in the first quarter with earnings. It's actual earnings. So, and I only say this because of this. We are now moving into more of a digital world, and we're leaving the card games and the Monopoly pieces and things like that behind. I mean, do we still have a gathering and a following for that? Yeah, we do. But what store do you go in to get that? Like, is someone going to a store specifically to get that? And of course, you could order them online.
Plus, you got to wear a mask now to interact with other people. And
right. So, I mean, with the digital realm, the digital world, it's a lot more convenient and easier for us to be able to do that. So, I mean, top 3 picks out of everything. I'd be a buyer looking into Disney. I'd look into Hasbro, but I may put Hasbro above all of this. It's interesting that you brought that up because Hasbro is not too far off, but I'd give Hasbro a buy recommendation for a short-term move.
Actually, it's getting like to be 2 versus 1 on about everything now.
Because
I actually like your opinion on hairlines, Everson. I think that's the thing is it doesn't matter what I think. What matters is people are willing right now to pour money into it. I mean, Royal Caribbean hasn't sailed for 2-3 months, and their stock has more than doubled. Carnival went from bottom at 8 and is now above 20. People are willing to put their money in it, so it doesn't matter what I think. It doesn't even matter if they're sailing or not. The only matters is people right now are willing to throw money at it. So why not catch the wave while it's coming up, Everson's analogy, and before it starts coming down, get out of it, take your quick profits, and move on to something else. That's just the way I see it for the short term. Max, do you agree or disagree?
I disagree. I mean, so I understand that you're going into discretionary stocks, and they're valid, although they're very close to resistance. But this resistance is not close to its all-time high. Like I said before, the best sector is the tech sector, and I'm going to give you guys some knowledge right here. Apple. Apple just broke its all-time high, and it's actually going to announce very soon its internet service for $4.99 using satellites. So they're going to be unmatched and they're creating their own industry. So Verizon and all the other internet services are going to get screwed. There's no way they compete with $4.99. They're going to get amazing market share. And yeah, and so they're going to be competing. And not only that, but it sounds like Apple might be able to use the satellites, the 60,000 satellites that Tesla put out there. So there might be a joint venture there. But if I'm looking at the Apple chart right now, it broke its all-time high. You have the SPY that's it just broke its support resistance. I'm sorry. So I feel like Apple is a great buying opportunity because the stock says it's good, the fundamentals say it's good, and the news says it's good.
Guys,
I
just
think
so you
something.
remember, we're not advising you to buy Apple. This is just what we think about the stocks and what we're thinking about doing. But Max, one thing really interesting about that is you're very coherent with your positions, because over the course of this show, you've always mentioned pick the best in one sector. And now you're mentioning Apple, which is leading in its little corner of the sector, and other
Little.
really strong technological companies. A lot of people believe in FANG, right? Which is Facebook, Apple, Netflix, Alphabet, and what's the other one? I'm missing
Google.
one, but you get the idea.
Google.
Like the really Google. No, that's Alphabet. But the really big tech companies.
Oh,
Um,
well,
so
Well,
a lot.
wait,
Go
let
ahead.
me just correct real quick. I don't want to ruin your momentum, Patrick, but so it used to be called FANG because the G was Google.
Yeah.
Now they have actually renamed it. And so Google is no longer a G; it's an A for Alphabet.
Ah, there you go. So anyway, so my point was that a lot of money has poured into those as the tech stocks went up, and people find a lot of safety in it because they're the best. But now you're bringing Apple as an example that, it still has room to grow because they're starting new enterprises. But do you feel like they're going, not just that one specific one, but in general, do you feel like they're going to reach a plateau? Like it's all the money can't forever go into those 5 companies.
Is that for me?
Yeah.
I mean, you're
Hey,
right.
you're the one who brought up Apple. You're the big stock guy now. Big stocks.
So there is a reason why these companies are the top, the A+ companies. Amazon is basically starting to own the world. That's why Elon Musk is going to Mars so that he could own his own planet, because Amazon's just taking over. In fact, I think Amazon is now going to start competing with against Tesla in electrical vehicles, because they're buying a electrical car truck company, and actually they're going to compete in the space race as well. But the reason why these companies are doing so well is because,
a fight.
yeah.
They did.
So, yeah, exactly. And so there's that, back and forth going on there. But Apple right now is well run. They're transitioning from physical sales like their iPhones. They're noticed that the market is saturated. Their iterations of iPhones is not as big and drastic, where it doesn't make sense to get the newest phone. So over the past 3 years, they've been transitioning into membership subscription-based income. And if you're looking at their balance sheet, you're going to see that their subscription base has become more and more a more prominent part of their income, which makes it more stable and less reliable on their sales. This is giving them capital. I'm sorry, I'm venting for a long time here, but it's giving them capital to expand their reach, and this is perfect for them to explore into the internet base, because at $4.99 they're going to be untouchable. I'm not sure how they're going to be able to price it down at that point, because you're dealing with satellites and high technology 5G. It's going to be more expensive for that than $4.99 per household. But we'll see how they make it work. That's what they're talking about.
Hey, Everson, we're going to go right to you, but I just want to point out, Max, excellent value that you just provided. And that's one really smart thing that you're mentioning, is that those leaders, a lot of times, how they try to expand in 10 different directions and all of them fail. But those bigger ones like Apple, Facebook, Google, they try different markets and they seem to be successful in a lot of them. So their potential isn't capped like smaller, less well-run companies would be. Yeah, they'll buy something and it's not always going to work. But a lot of the things that you mentioned, no, but I mean, obviously not all of their purchases are going to work. But if you think of a company like Yahoo, think about how many projects that they bought and it completely crashed, and they never really, they lost market share over time because none of the projects that they started actually succeeded. Not the same with Apple, with Google, and with Facebook. So that's a really good value that you brought there. How about you, Everson? Like, what do you see about this topic?
So just to clarify, we're on the topic about talking about the 5G move, or we just tackle the whole thing?
Well, we were talking about what the right opportunities are, and I was talking about more smaller stocks that didn't really recover as well. Max was talking about the leaders are leaders for a reason, and where do you
Right.
situate yourself? Like you're the master of investing in really obscure stocks that we've never heard of. So give us your perspective.
I mean, there's just so many strategies, right? Like, I mean, you're always making money somewhere. You're always making money somewhere, and it's really a determination in yourself to be able to decide where you would want to make that money in. I mean, right now is a perfect opportunity for pharmaceutical companies to be able to make money. But many people, when they get into pharmaceutical companies, I was telling one of my clients this, is that you you need to know the industry. You need to know that you know, certain industries, they're trade industries. Certain industries, they're investment industries. So you stay long with them. Some people get enticed by high dividends and not realize that the high dividend is just to try and see if you can get in there. But a lot of people lose value because they're just the shifts in the volatility in the market shifts them out. Obviously, these companies aren't just going to pay you high dividends and you can just coast it all the way through. You may get fortunate in some situations where you're able to and allowed to be able to do that, but they really, one stock that I'll mention, Patrick, you and I experienced was ORC. ORC on Friday pops 5%, all the way up to 5%. It was a nice rally. I think it might have even gone higher than 5%. But what happens later is near the closing of the stock, it drops all the way down to negative. So it, you know, these institutions, these banks and everything, the people who own the stock, it's just different variations of where you position yourself and getting into a stock right. As far as those big companies that Max has talked about, Apple and Tesla, I personally did not know about the move that was brewing with the satellite and everything like that, but
all the insider information on this show.
No, not at all. No insider.
No insider.
No, that's right. Okay.
I know nothing.
Yeah. So like I like those companies. I like American businesses. It you know, it keeps us as a number one industry, and you know, nowhere in the world would rather live on than the number one industries where the number one industries are. But as far as Amazon, Apple, and Tesla, I mean, when you got that kind of money to throw around, I mean, when you have $100 billion at your discretion, you can basically buy any small business out. Why wouldn't you want to go with those big contenders? But at the same time, you know, that's in a process of being made. It is true that, you know, 5G is the billion-dollar tech move, and a lot of phones are in 5G currently. And so, you know, I don't know if Apple has released their 5G technology phones, but I know that my phone isn't showing that it's at 5G, and I have friends that their phones are showing that it is at 5G. So I'm going to buy into that technology. So I see maybe a growth in the 5G. Definitely, if they release that kind of internet where you could buy it and it's exclusive for, you know, everyone, that's definitely a buying opportunity. But
and
still have
when I say $4.99, I'm not talking $499. I'm talking about $4.99. I mean, can you guys afford that?
Yeah, that's a great opportunity. But that's probably operating at a lower speed, right?
That's 5G.
I don't know. That's 5G speeds.
So it's not fully announced yet. The announcement date, I think it's in July or so, but we'll get more information then.
Well,
yeah, definitely.
Maybe now is the time to see which companies are going to actually lose value if that comes to be. I'm talking about Verizon and stuff like that if they're not prepared for that shift.
Right.
But guys, we're
Apple
getting
TV.
into, sorry, Everson, I don't mean to cut you off, but we're reaching close to the end. I want us to answer one of the viewers' questions, which would be, what's the difference between the Nasdaq, QQQ, the symbol, and XLK? Who wants to go first?
Everson, do you want the question?
And XLK, I know nothing about these except for
Okay.
QQQ. But
Everson, you don't know about the Nasdaq. Okay, let's go on to Max. Max,
I
tell us
I
how
Well,
do know
it's
no,
about the
done.
Nasdaq.
Everson, tell us about the Nasdaq. What is the Nasdaq?
Yeah, no, I do know about the Nasdaq. I know about the tech companies, but I haven't, meaning that I haven't really researched too much about like the QQQ and the XLK. I don't know too much about how those patterns are running, but I know that they're at levels where they're pretty high. I mean, a lot of these companies pushing high resistance levels.
Everson,
So
Everson,
yeah.
question is, what is the Nasdaq?
Oh, what is a Nasdaq? The Nasdaq is a group of different companies that tech companies. They're all technology companies.
All right, so
Okay.
it's in this. I don't know how you say it in English.
Okay.
It's basically a number that represents the value of all these companies that are listed.
Indexes.
Yeah.
Yep.
So
Yep.
an index, and I think Everson talked about that a long time ago, episode 7 or so. But so then we'll move on to a little bit different product, which is going to be the triple Q. I like to call it just the Qs. But so the ticker for that is QQQ, and all that is it's an actual ETF that mimics the movement of Nasdaq. That way you can trade it. And then if we move on to the XLK, it's another ETF, but it actually sort of mimics more this entire sector instead of just the companies that qualified for the Nasdaq. So that's the difference. You know, like Everson was talking about, your Nasdaq is basically your top tech stocks, and then you move on to more the entire sector, which would be your XLK.
Those are a spider fund for you home gamers there.
Yeah, so it's a way to invest and have exposure to the tech stocks, but each of them has a different holdings. Like, so you can, for all the ETFs, if you go into like the prospectus, you'll see what their strategy is. And if you look at online in your brokerage account or anything, often you'll see what their holdings are. So you don't necessarily want to like just copy what they're doing, but you can have an idea of like what they're investing in, which companies, and also in which proportion. Because sometimes you look at one ETF and one company really dominates it. So then, you know, it's too specialized. If that's not the strategy you're looking for, well, then you might want to look at another one. Like XLE, for example, just to go back to something different, but it's kind of dominated by two companies as opposed to the other ones have like 2-3% each. So yeah, you have exposure to a wide range of companies, but just look and see if that actually follows what you're looking to do. So guys, before we wrap up, you both have a mentoring program, and I'm always excited. I've learned so much on this show, and also like off this show when we text message. So why don't you both tell us a little bit about your mentoring program, because you both have open spots right now. So why don't we start with Everson? I mean, you've shown me some of your results with your students. I mean, it's really impressive. So how can people reach you, and like what do you offer?
Well, so I help people with financial stability. So if the stock market, and also to be able to get into the stock market. So I'll teach up to a level 2 of the stock market. So we'll get into options and everything, and I kind of guide you all along the way. Now, keep in mind that I don't do a recommendation of any particular stocks. I'll tell you what I'm doing. I'll tell you what my opinions would be about a stock, maybe as much as that much, but I will never tell you as one of my mentees that you should be getting into the stock and you should buy now at this price and so on. So with
But
that being said,
you show them your strategies, and now you do it, and you kind of help them understand how you would approach it.
I don't give them a fish. I teach them how to fish.
That's so powerful.
So when working with a potential client, I don't just accept anybody. You need to be focused and you need to be flexible. And what I'm looking for is not only that flexible and focusedness, but the determination that you have and that drive that you have. Because I don't want to cheat anyone out of their finances, and I don't want to waste my time. I don't want to waste other people's time also. So with that being said, yeah, I do have a program. I just have limited spots available, but we work from anywhere from if you don't have any money at all, but maybe even you're in debt, I'll help you to be able to create a plan where you can get yourself out of debt and move forward into profitability, and then maybe even taking the next step. If I've had clients where some of them were in debt. I had clients where some of them were in no debt but weren't in stocks. They wanted to learn about stocks, and then I have some clients that only want to work on learning about stocks. And so there's a value that's particular and that's suited for and constructed for each individual. And so the curriculum is sort of up in the air as far as how I would develop the right strategy, but it's up in the air because it's particularly conformed to that individual. So I really try to engage with the individual, and we work at a pace that's comfortable for them. But I'm not going to lie, if we're at a point where I feel that you need to be in stocks, that you have the opportunity, and I determined that get in, let's get in and let's make money. But
let's make money. That's a good advice.
Make money or get rid of debt, one way or another. But that's what I do. I'm a financial coach.
How can people reach you if they're interested?
Oh, thanks. So you can go ahead and just comment below. I have my personal number. I don't really want to give my personal number out on YouTube.
He doesn't even give it to me.
Yeah. Or you can reach me at what is it? Reach out to me at my personal Instagram. It's Kaui for Life. Kaui, the number 4 life.
All right, we'll put that in the description. And what about you, Max? Just to give a little testimonial, I've adopted a lot of my strategies based on some of the strategies that Max was using. Of course, like, we're not trading exactly the same way, but a lot of my income producing, like, weekly strategies I've taken from Max. And if I had known some of these strategies before, I would have made more money and lost less money. So Max, little testimonial, and one of your ambassadors. Wow. Tell us a little bit about your course. Well, not your course, but your mentoring program.
Well, thanks for saying that. It means a lot, and it's been quite a journey. It was a lot of fun. But my mentoring program, we basically start with a 30-minute free consultation. You can access that at Calendly, CALENDLY.com/Max, MAX, Hadwin, HADWIN. You'll be able to schedule that free consultation. We'll go over your knowledge, what kind of returns you're making per month. And so the entire program is based to take you from 1% a month up to 10 to 15%, depending on how quickly you learn and how deep the rabbit hole you want to get. And so it's basically just a 1 hour a week class where we go over the next topic to get you to the next level and increase your monthly return on investment. So go ahead and schedule that at calendly.com/Max Hadwin, 30 minutes for free, and we'll see where we can go from there.
So you take from beginners to advanced, right?
Yes. Now, if we get more advanced, if you want to get into the top strategies, then it's more like a 3-day weekend where we're actually face-to-face. We're spending a lot of time, and I take you into the most intense, most profitable strategies in the world.
Keep in mind that what Max and I do are very, very similar, and if not, it's on the stock side, it's probably the same thing. Max has a specialty in being able to do charts. I have a special ability to be able to just feel out the market. So I look not only on the charts perspective, but I look at, really being able to feel that next move. In any case, we work together as a team. So there may be some type of collaboration when it comes to individual stock research. So this is a team. This is our team. And although, you may seek coaching under Max or myself individually, at some point we probably breed the same knowledge.
I mean, not to toot our own horn, but as I mentioned before, like, this is our mastermind. Everson, I talked about the company Plantronics. You made pretty good money about it. And you is that a stock that you had looked into before? Not really, I don't think. And I brought it to your attention, and you made tons of money with it.
We constantly do this where Patrick or Max, they might make a suggestion for the week, and I'll be like, no, we'll be like, no, and so Patrick did do that. He brought a PLT, and he showed me PLT, and I looked at it. I was like, oh, interesting, maybe. And I waited a couple of days, I remember, and it was like closer to the end of the week that I was like, all right, I'm gonna test this out. I mean, I started looking at the statistics and everything like that, and I was like, I'm gonna give it a shot. So I just gave it a shot. It worked out. I mean, it's nice.
There you go. So yeah, when you guys join their,
Thank you.
Just added bonus, when you guys join their coaching, like an added bonus is that you get this group think, like collaboration thing, and I think that's very powerful. I think these guys are actually underselling because it's an amazing value. So guys, thank you for being with us this week. I really appreciate you. Please like and subscribe, leave a comment. We love your questions. That's personally my favorite part of the show, so keep the questions coming. Everson, Max, thank you for being amazing co-hosts. We'll see you guys next week.
Hey, just before you guys leave, also hit the bell button that you see on YouTube. If you're looking at this on YouTube, hit the bell button so you know when we post a new notification or post a new...
Hit the bell button, but Everson, stop ruining my outro. It was perfect. See you guys next week.
All right, guys.
Aloha.